Hello, retail traders. I'm Washboard Jim with a Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I'm going to show you how to chart up a gap play on the 1 hour time frame that I charted up for Friday morning to watch it and watch how the trade became into reality, and how to maybe identify a gap play when you see one. So we've got the SPY right here, and I've got it timed up on the 1 hour time frame, and we had a little gap back here on the 24th where we jumped up, and that's called a gap play. And so when I came in Friday morning, we had that pullback right into close right there. We went down below that gap. So when I'm charting this up, and I had this all charted out like this right here, you have the gap, and that's between 678.26 and 681.41, and you go ahead and you chart that in right there and go ahead and just draw it all the way across. Then you had to pull back Friday or Thursday evening, and that's a little pivot point area inside of that gap. So it either was going to, when it broke out, it either was going to pull back and hold at that gap at 681.41, or it was going to do a double bottom, which is a pivot point in between that gap, or it would come down and hit the bottom of the gap for a very strong buy. But you had a double bottom right here, and that's part of one of my chart patterns that I use when I'm trading. I'd call that out. I'd say we got a double bottom here, folks, with two engulfing candles on these 1 hour time frame. So I'd be maybe put a starter position in right here. And there's a couple things that went on here. You go back a little ways back, and we hit that 200 SMA, and we also kind of pivoted off that 200 EMA. So as you come up here, you can see we landed with a tweezer bottom right on that 200 EMA right here. And that's called a tweezer bottom with a spinning top hammer right off the 200 EMA, which did a double bottom from the previous day on Thursday. So that was more or less a real strong buy to take that trade off that 200. And that's just more or less a sell off most of the day, and then landed on that 200 EMA with a tweezer bottom. And that would have been a double bottom, counting the Thursday that happened the day before. So if that makes any sense, we got the gap. Your first support's going to be right here at 681.41, which we did pull back to. And then it proceeded on down to the next support level, which was that double bottom, and held there and bounced off the 200 EMA for a very strong buy on the 1 hour time frame. Now, this is how I had it lined up. I said resistance to break was 689.36, which was the double top up here, and I put a little trend line down there to that one right there off the bodies, and that was my resistance level. And then we had the first support, which was the 681.41. So if it would have held the gap, I would have took that trade right there, but it did not. And then the second one was the pivot point, which was the double bottom at 679.93. And then the gap fill would be your last support, which is 678.26. Now I would have probably possibly took that trade too if I saw a reversal coming. So now I'm going to take this to the 5-minute time frame and see what it looked like on that day. As you pulled back, we had this little snake and we had a fallen wedge. So I draw this fallen wedge in with the trend lines using the body of that candle right there to the body of that one, and I'd be going to the body of this one to the body of this one right here. That produced a falling wedge, which is also another bullish indicator. And then when we broke out, we pulled back and we had an inverse head and shoulders off that fallen wedge. So when I'm breaking out of a snake, or I'm breaking out of that pullback of that knife, I'm looking for a chart pattern to show up. In this case, we had an inverse head and shoulders with a tweezer bottom right here. And I would have probably took that trade right there if I did not take it sooner than that. Plus we had another indicator here where the 9 EMA crossed the 21. And I'd run that all the way up. Might even scalped it if I was in the SPX, which I did trade. I might have scalped some of them and took them off here and made $150 or so off that contract as it run up to a double top. But as you can see, we came back and respected that 21 again off these 3 black crows, and I also called that out on the 5 minute. So we had another trade right here. If you missed this one, you could have caught this 3 black crows on the 5 minute and had a tweezer bottom and run it up to a double top and got out of that trade right here at the double top, right into close. So that's the 5 minute. Now if I'm looking at the 1 minute, this was Friday, you can see a lot better on the 1 minute where this came up and found some resistance right there, pulled back again, and then came back up and broke that double top, and then came back and respected that shoulder line on that 5 minute of that inverse head and shoulders. And then it ran on up to a double top right here and got out of the trade, and then caught it back off the 263 EMAs and running on up to a double triple top up here at the top on the 1 minute time frame. You have 1, 2, 3, and a quad if you want to count that wick. You also had an indicator down here at the bottom where the 9 crossed the 21, and that's a good eye that you broke out of that little snake on the 1 minute. There's all kinds of different ways of reading these charts. So this came back here, the 1 minute, you had like a little knife right here. It broke out of the channel. Let's erase all this. Well, I don't really want to erase it. Might have to. So you take that body right there, run it up against that next body there. It comes up, just bring it on down. So you got your snake right here, you got your breakout, and you got your pullback into an inverse head and shoulders. And this is on the 1 minute. And it came back and hit that old resistance, which was now becomes support off the old resistance line on that channel on the way down. So you had breakout, pullback, runs up and hits the 63, and then comes back again and performs inverse head and shoulders with a tweezer bottom, and then breaks on up to the 200s. Or you could have got out here at the double top and scalped it for $40-50 a contract with them 3 white soldiers. So I was calling this trade out Friday. I held on to it for the longest period of time, because when we came back here, by the time it got back to my entry price again, I just held on. These things went to $2,000 by the end of the day out of this on the SPX. And the SPY would have been a couple $100. But you got the snake, breakout, pullback, inverse head and shoulders, boom, to the 200 out of the trade. And you can go ahead and have your day. And it ended up taking off, respecting the 200 EMA twice, and run on up to that triple top that we had on the 5 minute by the end of the day. And this was a killer trade. I did a video of the fallen wedge on the SPX if you want to go watch it. Now I'm using the bodies of the candle. So here's the SPX. You had another fallen wedge on the SPX. Use the body of the candle, run it to the next body of the candle right there. That one you see right there, run it to that, then to that. And then it broke out on the fourth time. Same as the body right here on this one. Hit the body right there. So you had, on the 1 minute time frame, you had a falling wedge with an inverse head and shoulders. Came back and created another little head and shoulders right here. Then bounced up, broke out of that flag and hit the 200 EMA, 200 SMA, and respected the 200 EMA again on the SPX, and then run up for the triple quad top right up here at the top of the page. And I held on to this most of the day until I got up about $1,000, and I said, I'm contract, and I got out of the trade. So there you got a triple top. You're out of the trade on a triple top. That's a bearish indicator. They usually pull back and respect that triple top, and then it could come back up the fourth time and break that triple top. You will get a triple top breakout, but it depends on the momentum of the trade, what time of the day it is, and what kind of news is on the trade. If it's like a regular stock and it got some real good news, it could break out, but the odds of it breaking out of a triple top are ain't that high of a percentage. They usually pull back and then retest that triple top, and that's when you have the breakout. If it wants to break out, it's all about the news. Now on the 5 minute, you see I can move around with my time frames. We got body, 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 little head and shoulders right here. You got the body, the body, and the body, and then the breakout on the 5 minute. And then it respects the 21 with these three black crows. If you missed that trade, you could have got into it right here, right around 330, and run it on up and had a heck of a day with that trade alone. Then we had three black crows right here at the end of the day off the 50 SMA. So we'll see what Monday will bring. So remember, this is all about the gap play, and I'm going to chart this up to you for you one more time, just to kind of show you. Clean this up. You want to go ahead and color in your gap. Use the body of the candle. Bring it on down. That's the 1 hour time frame. Let's change this here because of that red candle. We'll make this a different color. Then you want to go ahead and do a pivot point, call it a double bottom right here on the 1 hour time frame. We're going to put our price lines in now. So you got the price line at the top of the gap. You got the bottom of the gap. And then you got the pivot point, which is that double bottom right there on the gap. This is on the SPX. And then that come in Friday, when you took the trade on the 1 hour time frame, you had a tweezer bottom with a spinning top. And then it bounced on up and did a triple top up here at the top and get out of the trade. You had a tweezer top up here. It pulls back, has two black crows, and then tweezer bottom off the 63. And that's on the 1 hour time frame. You look at the 5 minute. So you had the double bottom right here on the 5 minute. Comes back and hits that double bottom right there. And you got the perfect little snake breakout right there. You call that a double bottom pivot point inside of the channel. So your first support, as we broke out and we're coming down, if it didn't hold that top of that gap, your next support was this right here, hitting that double bottom. And then your final support would be down here at the top of this resistance level, would be your third. And then we closed with a double top here at the end of the day on the 5-minute. Triple top counting that wick with a confirmation. So that would have been your exit idea, and you'd had plenty of time to get out of that trade into close. Then it comes back and hits the 50 SMA respectfully. So that's called a gap trade. Gap fill. Then you got your pivot point off the 63 EMA. Could have took that trade right there even, as that candle came back down for the third time and took it off the 63, because you had higher lows with that candle and it respected that body right there, which would have been a solid support off the 63 EMA. Now I use chart patterns. The chart pattern in this case was the gap with the crows coming down on the 1 hour time frame with a tweezer bottom. The moving averages was a 63. That's on the 1 hour time frame. Now on the 5-minute, they change around, that's for sure. The 5-minute, you had the 9 crossing over the 21. You had inverse head and shoulders, and you had double bottom. As it started to come up, it respected that double bottom right there on the 5-minute. Plus you had the breakout of the 1, 2, 3. 1, 2, 3, and it breaks out, runs on up, finds some resistance level at the top of that gap. See, that's that gap fill right there. And pulled back with 3 black crows. You could have took it off the 21 and run it up and hit the 200s and got out of the trade, or held it like I did and was talking about it to the triple top up here and got out of the trade at the end of the day. But you never know. You never know if that thing's going to take off and do that triple top. So sometimes I get out of a trade early, but I'm green almost every single trade I make. I do get stuck in some trades and I cost average down, but even 95% of them come out green by the end of the day. Every once in a while I have a bad trade. And I'll just take the loss. But usually they pull back here lately and they bounce back up, and we're back at resistance level by the end of the day. And then you have 3 black crows. If this happened sooner in the day, we bounced off the 50 right here, I would have probably took that trade if we had 3 black crows right here in the morning, or if it had a double 3 black crows right here, I might would have took that trade and run it back up to a double top. Because you had 3 black crows right here and boom, and same right here. But this is at the end of the day. Everybody's getting out of the trade and getting stuck and don't want to get caught over the weekend. So that's called the gap play. This is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And have a great day.